Good morning, ladies and gentlemen, and welcome to Tallinna Vesi's webinar. My name is Elise Vennik, and I welcome you all today. The webinar will be hosted by the Chairman of the Board, Karl Heino Brookes, and Chief Financial Officer, Riina. Firstly, Karl Brookes and Riina will introduce Tallinna Vesi's financial and operational results for the first quarter of 2019, and right after the presentation, we will be answering all of your questions. I invite you all to use the question box on the right-hand side of the screen to send in any questions you might have. And as said already, all questions will be answered right after the presentations. Now, I will give it over to Karl Heino Brookes and Riina, please.
Thank you, Elise. Good morning, everyone. Thank you very much for joining the Q1 2019 webinar today. As usual, I'll start with a brief update on our operational performance during the first quarter. In summary, the operational performance has been excellent. We've delivered once again an excellent set of results across the various different operational parameters. So, for example, in terms of water quality, we achieved 99.73% compliance amongst the 744 samples taken and tested from across the water network and at customers' premises, with only 2 samples exceeding the limit values for the drinking water regulation. Water losses in the distribution network or leakage were even lower than in the previous year. So for the first quarter, we've achieved 12.86% leakage against 15.19% for the same period last year, 2018. Having this leakage rate under control is a testament to our investment programme. So in other words, we're replacing the right parts of our network. And it's also a testament to how effectively we repair and maintain our network when things go wrong. The final treated effluent that leaves our treatment plant at Palliser was also fully compliant and complied with the permit parameters. We are working very hard to provide a high quality service to our customers. And in Q1 2019, our customer rated our service 4.1 on a scale of 1 to 5, 5 being the best performance. So let's move on to the tariff dispute. There's a lot of detail in the slide already on this, so I'm just going to pick up the key points. So sadly, on the 12th of December 2017, the Supreme Court rejected the company's cassation in relation to the ongoing tariff dispute, which means effectively that the company is now bound by the Estonian Competition Authority in terms of the tariff approval process, which used to be contained within the services agreement that we had with the City of Tallinn. The company submitted its tariff application for Tallinn and Saue areas at the end of February 2018, and since then has been in continuous dialogue with the Competition Authority regarding the build-up of that application. In December 2018, the Competition Authority issued a decision to Tallinna Vesi's application and rejected it initially, related to a couple of parameters in the build-up of costs. Competition Authority decided to approve the prices of extra services submitted for approval by the company. However, as I've said previously, refused the price for water services. The Competition Authority's view, the sales revenue should be approximately 10 million lower than the figure that we applied for. On the 3rd of January 2019, IAS Tallinna Vesi challenged the Competition Authority's decision, as we do not believe that the Competition Authority's position is justified. The challenge was declined by the Competition Authority, and Tallinna Vesi disputed the decision in the Tallinn Administrative Court on the 14th of March 2019. In addition, on the 6th of December 2018, the Competition Authority notified the company of an initiation of supervisory review procedure, to which companies responded on the 23rd of April 2019 and is again waiting a response from the Competition Authority. So that's the local tariff dispute, which in summary is still ongoing. Separately to that, as I'm sure everyone is aware, we commenced international arbitration proceedings some time ago. So after years of trying to negotiate a solution, the Supervisory Council of the company decided to commence international arbitration proceedings against the Republic of Estonia for breach of the bilateral investment treaty between the Netherlands and the Republic of Estonia. The big news today is that we're actually expecting this decision finally on the 3rd of May. So next Friday, we're being told that we will get the decision in the international arbitration proceedings. And of course, that's something we eagerly await. I'm now going to hand you over to Riina, who'll take you through the financial highlights. And then, as Elise has mentioned before, we'll come back at the end for any questions you may have. Thank you.
Thank you, Karl, and good morning to everyone. Now I would like to give you the overview of the financial performance of Aktsiaselts Tallinna Vesi in the first quarter in 2019. After financial highlights, I will give more detailed overview about sales and costs. The performance of the group continues to be good. Total sales revenues were 4.2% or 0.58 million euros higher than in the first quarter in 2018. The sales of water and wastewater services increased by 1.3% or 0.17 million euros. It was accompanied by higher revenues from stormwater treatment and disposal services revenues from main service area by 18.6% or 0.15 million euros, and also by an increase in pipe construction and asphalting sales, which grew 97.2% or 0.27 million euros. The gross profit for the first quarter in 2019 was lower by 0.7% or 0.06 million euros compared to the same period in 2018. The gross profit was impacted by higher direct production costs, but it was balanced by higher revenues, but also by lower chemical costs. In the first quarter in 2019, the operating profit was 0.09 million euros higher than in the same period in 2018, being additionally affected by the lower administrative and other expenses. Compared to the first quarter in 2018, the net profit of the company was 0.15 million euros higher. Now let's move on to the next slides, and I will comment on the changes in revenues and expenses a bit closer. Let's start from the sales. Total sales revenues for the first quarter in 2019 increased by 4.2% or 0.58 million euros. Total revenues from water and wastewater services were by 1.3% or 0.17 million euros higher than in the first quarter of 2018, amounting to 13.03 million euros. As we still operate with the frozen tariffs, the change in water and wastewater revenues was solely driven by the consumption. The domestic consumption in Tallinn and Saue area increased compared to the same period in 2018 by 1% or 75,000 cubic meters to 7.5 million cubic meters. The increase in domestic sector came from apartment blocks. The consumption in apartment blocks increased by 1.3%. On the other hand, the commercial sector consumption in Tallinn and Saue area decreased by 2.9%. or 74,000 cubic meters to 2.5 million cubic meters. The decrease came from industry and other commercial clients group and was partly balanced by increase in leisure segment. Total volumes from outside service area have shown an increase by 30.9% to 1.83 million cubic meters compared to the comparative period in 2018. The increase was mainly driven by higher waste and stormwater volumes. The revenues from construction and asphalting services showed an increase of 97.2% or 0.27 million euros compared to the first quarter in 2018. This now takes us to the costs. The total cost of goods sold in the first quarter of 2019 were higher by 11.2% or 0.6 million euros, amounting to 6.4 million euros. Direct main production costs have increased by 17.4% or 306,000 euros, mostly due to the higher electricity costs and pollution tax expenses, balanced by lower chemical costs. Chemical costs decrease of 6.9% to 0.4 million euros is driven by higher usage of methanol and polymers to remove nitrogen. Electricity costs increase of 32.3% to 1 million euros is driven by on average 35.5% higher prices. Pollution tax expense increased by 32.5% to 0.37 million euros, mainly due to the 16.3% lower treated wastewater volumes accompanied by higher pollution load of BOD7 and suspended solids. Staff costs increased by 3.3% to 1.64 million euros. The increase is mainly driven by higher construction services related workload in Watercom. Depreciation costs increased 4.4% to 1.33 million euros. The increase is related to the change of accounting for leases, as IFRS 16 became effective from 1st of January 2019. More information about the change in accounting for leases can be seen in abbreviated accounts that was published also today in the morning. Construction and asphalting services cost increased by 84.6% to 0.44 million euros and is related to higher pipe construction and asphalting services revenues mentioned earlier. Other cost of goods sold increased by 3.2% to 0.91 million euros is related to higher asset maintenance costs. Administrative and marketing costs decreased, on the other hand, by 7.8% to 1.37 million euros. The decrease is related to lower tariff dispute-related legal costs. Legal costs still will continue to affect the administrative costs up to the end of the international dispute and also the local disputes, which is again ongoing in relation to the negative decision from the 4th of December 2018. The amount of the legal costs is dependent on the work that needs to be put into the disputes. Lower other income and expenses has mainly been affected by one-time higher penalty income, which we received. Net financial expenses have mostly been affected by lower interest costs, balanced by lower positive non-monetary revaluation of the fair value of the swap contracts. It takes us now to the cash flows. The cash position as of 31st of March 2019 continues to be strong. The company's cash balance stood at 68.83 million euros, forming 26.6% of the total assets. Compared to the end of the first quarter in 2018, the cash balance has increased by 16.5 million euros. The biggest contribution to the cash flows comes from the main operations. The company's collection of receivables continues to be high, being 99.8% on average. In 2019, net cash flows from investing activities resulted in a cash outflow of 0.87 million euros compared to the cash outflow of 1.05 million euros in the comparative period in 2018. The investments into fixed assets has been almost at the same level as in the comparative period, amounting to 1.67 million euros, and the compensation for pipes received were slightly higher by 0.2 million euros. Financing cash flows for 3 months were lower, mainly due to the lower interest payments. In April 2019, the Supervisory Board of Tallinna Vesi reviewed the dividend proposal to be presented to the Annual General Meeting of Shareholders at the end of May 2019. The Supervisory Board decided to propose the Annual General Meeting a dividend payout of 75 cents per A share, which is slightly more than 2 times bigger than in last year, and 600 euros per B share. The company's net profit for 2018 amounted to 24.2 million euros. Dividend payment forms approximately 62.1% from the net profit in 2018. The dividend payment for private person will be slightly less than for corporate investors as a result of the change in the income tax law. More detailed information can be found from our website. The Annual General Meeting of Shareholders will be gathering on 30th of May 2019, and the dividend payment will be due on 25th of June. That concludes the overview of financial performance for the first quarter in 2019. Thank you for your time and attention, and now we are waiting for questions if you've got any.
Thank you to Riina and Karl for the presentations. Now, as said by Riina already, we will proceed with the questions. We've already received 2 questions in advance, so we will be addressing those first. But for all of you who'd like to ask additional questions, please use the question box on the right-hand side of your screens to type in any questions you might have, and we will answer them after we've answered the 2 questions already submitted. So first of all, I will read out the first question that was sent in by George Mastrokouskos previously. We see that no substantial extra provisions are made apart from the initial 16 million in 2017 for possible disputes with consumers on water prices. I assume the management thinks 16 million is more than enough. And I will now give it over to Riina to answer this question, please.
Thank you for the question. As regards to the provision that has been formed for possible third-party claims, this provision is under the regular review. At the end of 2017, we made a provision as regards to the third-party claim, 17.5 million euros, which was reviewed at the end of last year, and the amount of which is 19.1 million euros. As regards to possible claims, we haven't received any official claims yet. The provision has been made based on the best knowledge that we've got, but the total amount is being reviewed continuously.
Thank you, Riina. And there's also been another question from the same person, and I'm now going to read it out. If the competition committee succeeds in forcing Tallinna Vesi to reduce its prices by 20%, what will the effect be to the bottom line? And the full revenue lost will translate to losses, or there will be measures to protect profitability? Please, Karl Brookes, I'll give this one to you to answer.
Okay, thank you very, very much for the question. A few points in this really. Tallinna Vesi is already a very efficiently run company. Many of these efficiencies being made post-privatisation back in 2001. So I firmly believe we already deliver a very good service at a very reasonable price for our customers in Tallinn. The method of regulation used in Estonia with the competition authority doesn't really reward efficiency, because costs are passed through, justified costs are passed through, and profitability is a measure of the company's net book value times a weighted average cost of capital. So therefore any efficiency made in theory would be recaptured at the next tariff submission. Therefore we need to explore other opportunities. As we've talked about previously, we have a non-regulated construction business within the group called Watercom, and we have seen some solid incremental growth over the previous years. However, as we've said before, this is never going to replace the gap that could be generated if we end up with a forced tariff drop by the competition authority. So it's making good progress. I believe now we are the 10th biggest construction company in Estonia, but just to repeat, I don't think that will backfill the losses potentially from the competition authority. The other thing I would say, and we're watching this with interest, we are aware that outside of Tallinn there are 200 other water companies, and consolidation is already underway there. So that's something we'll watch with interest. Early on in the contract, when it was first started, there was some connections up to adjoining municipalities. That has proved very good for the company, and maybe some of those opportunities could come along in the future. I think the other part of your question is how does the 20% drop, potential 20% drop, affect the bottom line? Well, it just effectively goes straight through to the bottom line if the costs are not allowed. Thank you.
Thank you, Karl, for the answer. We've also received several other questions through the question box, so we will be answering those next. Starting with two that we've received, we'll actually answer those together. So Arvidas Jakevičius and Sander Danil have asked for an update on tariffs dispute with competition authority, as well as the expected timeline for the local court dispute. So Karl, please, could you?
Yeah, I mean, I gave a brief update previously, and there is quite a lot of detail in the slides. What I would say is that this is still ongoing. We've appealed initially to the competition authority because we don't agree with their analysis regarding a couple of items in the build-up of the tariff. They rejected that appeal, and now we've started in the local courts again. So in terms of the timeline, there's nothing much to add for that now. We are waiting for the date of the first hearings.
Thank you, Karl, for that. And there's another question from Sander Danil on the procedure for the CA to apply a temporary lower tariffs for the company, and asking why the CA has not already used these legal opportunities to imply temporary tariffs. So could you please explain a bit about those?
Okay, bit of a double question this. Thank you for the congratulations on the performance, first of all. Sorry, are we? Are you okay?
Yeah.
Okay.
As regards to temporary tariffs, we have, as we've also shown in our stock exchange announcement on 6th of December 2018, there was a letter from CA announcing for possible supervisory proceedings, and which we applied on 23rd of April. So currently, we're not aware that the CA has started the temporary lower tariff proceedings. As such, they've got a right to do so. And currently, we don't have any additional information as regards to this point yet. But they've got a right to start temporary tariff proceedings. It does take some time because there are official procedures that needs to be followed. But currently, we don't have much more information as regards to that field.
Thank you, Riina, for that. And we have another long question from Henrik Igasta. So I'm going to read out the whole question first, and then Karl and Riina will answer. First of all, congratulations on a solid quarter. Can you provide some color on your CapEx going forward, say short term, 1 to 3 years out, and medium term, 5 years? What would be the main focus of such CapEx, network upgrade and renovation? Is there a business plan or some development plan of the City of Tallinn that any such CapEx will be based on? Just trying to get the sense of FCFF going forward.
Okay.
So please, Karl.
Yeah, apologies for answering this question before. We'll do this as a bit of a double act, I think, between myself and Riina. If we start with the city first of all, and the obligations that we've got with the city, we have a annual 5+5 CapEx plan. So that means we have to replace 5 kilometres of wastewater network and 5 kilometres of water network, and that's something we will be continuing working in conjunction with the city where possible. In terms of other larger capital investments, we've got some work to do at our wastewater treatment works, and we're currently in procurement for that work, which will take place over a 3-year period. I think the estimated value of that is somewhere around 7 million. We're also looking at a lake bypass. So at the moment, our catchment water arrives at the far end of Lake Ulla Mist, and what we're looking at doing is putting a pipe under the lake so we can switch between lake water and catchment water. Again, I think we've talked about this quite extensively in a previous presentation, but they're the two main ones. And in summary, I would say that we don't foresee any huge capital investments going forwards over the next 5-year period.
Effectively, Karl has answered the questions already. We do have our internal plans for CapEx going forward, and there, as Karl mentioned rightly, there are a couple of bigger projects that affect slightly our CapEx program going forward. We have invested into our assets in order to keep them in a good operating way, and we keep our assets in the good shape, and we continue to do so also in the future. So the capex also going forward currently today, as we can see, is around 8 to 12 million euros. If there will be a major changes, then we will notify also our investors via the stock exchange announcements. Thank you.
Thank you, Karl and Riina. There's been a follow-up question from Henrik Igasta. Thank you. How does the euro 181 million net book value of fixed assets as at Q1 2019 compare with the competition authorities' current view on the value of regulated assets? Similarly, is the current level of fixed assets depreciation representative of competition authorities' view on regulated depreciation? Thank you.
Thank you for the question. It's related effectively with the regulation that is imposed by competition authority or the competition authority is using. So I'm just going a little bit beyond the question. So effectively the tariffs are formed in a way that there are three components in the tariff that are allowed by competition authority, one of which is justified costs. Justified costs are the costs which competition authority deems to be reasonable and needed for running the company. There are some cost items, for example, that are not allowed, which could be disputable. For example, doubtful receivables, etc. This other component is related with profitability, justified profitability, and that is for sure accounted from the net book value of our assets. And it's multiplied with the weighted average cost of capital, which nowadays is 5.45%. As regards to our main assets, competition authority do take into account the assets net book value, and we don't have any problems with this one. The problem that we ourselves can see is that the net book value has been formed over the course of time and doesn't reflect the economic value of the assets, meaning that the more fair view would be depreciated replacement value, but currently a current regulation doesn't allow that. And the third component is capital component, which is effectively equalized to the depreciation. And that is also one of the arguments where we kind of disagree, because the capital component is lower than the investment needs as such, meaning that it doesn't cover the needed investments and the serving of the loans. Thank you. I hope that it answered the question. There is also the next question. So as regards to capex, the level of capex is expected 8 to 12 million going forward. That is the best knowledge currently. If there will be changes, we will notify you. There are a couple of big projects, as Karl mentioned. One is lake bypass, the other one mechanical treatment. We are in the procurement currently, and the final price of the mechanical treatment reconstruction is not known. When it's known, it's a huge project, and that will be notified via the stock exchange announcement.
Just perhaps to add a little bit to what Riina's just said, and a lot of this dispute is about the net book value. When the company first signed the services agreement back in 2001, the net book value had no relevance on the tariff. It wasn't in the tariff mechanism. So perhaps it wasn't worried about unduly at that time. The actual valuation of the assets wasn't too important, but of course now it is, with the regulators' chosen method of regulation and the fact that there is no re-evaluation of the assets allowed.
Thank you, Riina and Karl. We seem to have answered all of the questions that have been submitted so far. We'll give all of you another minute to possibly submit any other questions you might have now that Karl and Riina have answered the initial ones. So please use the right-hand box on your screen to type in any questions, and we will be coming back to you shortly. Thank you. Okay, seems like we don't have any new questions coming in. So thank you all very much for participating today's webinar. The recording of the presentation will be available on the Nasdaq Baltic YouTube channel shortly, and you will find the presentation materials on Tallinna Vesi's webpage as well. Karl, Heino, Brookes, and Riina, thank you for the overviews, and participants, thank you for the active discussion. Oh.
There was one question coming in.
Yes, thank you. Sander Daniel managed to send us another question, which we will be answering. So he's asking, are your further steps regarding the local dispute anyhow related to the potential decision from the international case? Riina and Karl, please.
Yeah, the two things are not linked. They are separate proceedings. The international arbitration is about compensation, whereas what's going on with the competition authority is about the build-up of the tariff locally. So yes, the two things are not connected.
Thank you, Karl. So we will wait another 10 seconds to see if there's a follow-up question to that. And if not, then we will be concluding today's webinar. Okay, thank you very much to all of the participants, Karl and Riina. Once again, thank you.
Thank you very much. Goodbye.
Thank you, everyone, and have a nice day. Bye-bye.